Hello and welcome to this very special series. Startups are often driven by motivation, innovation and creativity, but they also need to establish a robust culture of governance, risk and control to ensure their long-term success. By setting up effective guardrails of governance, risk and control, startups can enhance their credibility, accountability, transparency and resilience in a dynamic and competitive environment. So how do we better prepare for these challenges? To delve deeper into this topic, I am joined by Kalpesh Jain, MD and CFO Multiples Equity, and Puneet Garkhel, Partner and Leader, Forensic Services, PwC India. Gentlemen, welcome to the show. I'll start with you, Kalpesh. You know, there has been so much action now and we hear so much about startups struggling on the governance front. There have been quite, cases which have been quite messy as well in the public domain. What is your sense of the overall startup ecosystem? Are these one-off cases, you think, or is there a systemic issue which needs to be looked at?
So I would say, first of all, it's not a systemic issue as such, but the reason is that there's no focus as such beyond growth in the startup industry. There has to be also a need that there's a focus on governance, processes, systems around it. The back end of it is through the process and systems and governance, risk management, all that has been missing in quite a lot of startups. Plus, generally in the startup industry, this area has actually become more stronger as they become with a particular size. So it's not, I would say, systemic issue, but the focus also needs to be there from the stakeholders, which are the shareholders, through the board process, making sure that the governance really works very well. And beyond the governance, within that, even the process systems, so that all these issues which have been identified are well taken care in advance as against becoming a big issue later.
Puneet, in your connect with all your clients, what are you telling them to keep a particular focus on as this whole governance question keeps emerging every now and again? What are the key elements which companies and startups need to focus on?
So as Kalpesh was saying, right, there is a lot of things that one needs to focus on, but primarily once you're invested, you need to really look at your operational resilience, you need to look at your governance per se, and you need to look at your financial metrics all put together. You can't look at things in isolation. What's really happened is multiple times things are looked into isolation, which creates ripples going forward. Because at the end of the day, everybody is looking at getting valuations. All the startups are trying to say how fast they can reach a higher valuation game in the ecosystem that they're working. But that obviously needs to be well articulated with all the other matrices. So what we are requesting and what we are trying to tell all the startup ecosystem and our private equity clients who are investing in them, that please take a holistic view of the entire situation, not just one dimensional view in terms of how do we get into the valuation game.
Kalpesh, you're in the business of investing. You deal with entrepreneurs who are by nature, in a sense, free spirits, right? They want, that's the reason why they are special. Now, is there a trade-off then between keeping a close eye on governance, how they're working, are they really doing the right things in the governance sphere, and allowing them to work independently? Because is there a conflict, or is there now understanding among these entrepreneurs that they have to do this, there is no way out?
Yeah, so for us, it's actually a combination of both. We want a really good entrepreneur who knows what the business is. It has to grow. But once it grows, there has to be a right balance of corporate governance around it. So at the time of going into investment, while we look at the business opportunity which is there, the thesis, what it is looking for, what the promoter is looking for and everything, we also focus on corporate governance. We look at operations of the company in detail. We would look at their compliances. We look at integrity of some sort of an integrity check around various key members of the company and everything. Get a comfort around this as part of our diligence process. A lot of times when we have our interaction with the entrepreneur, we'll get a comfort whether he's more like on the side of believing into corporate governance or governance part of it, process part of it, or not. And then really take a plunge in investing in the company. So we would want to have it as a combination of both.
Puneet, You know, there is this whole thing now which we are also covering in Business Today of top class people, talent now being brought on board at startups from various big companies included. Now, are you advising your clients, for instance, to talk to to talking to them of getting the bigger talented people, higher level talent into the boards, into the kind of top management? Are you doing that? Are you seeing that happening?
Absolutely. That's the change that's really transpired over the last few years with all these changes that have happened and all the cases that you see in the public domain, right? That's triggered a change to kind of get more talent on the table, right? Which includes primarily getting CFOs or CXO level professional people, as well as an independent board of people who've got experience in that field to kind of come and help those startups really look at those governance aspects, get those governance aspects in place. So if you actually relook at the entire process of getting investment into a startup, right, the entire process has changed, right, from getting into an enhanced due diligence to a financial review to a technology. So all these areas are something which have brought in a lot of focus. So therefore, startups and organizations who look to be the future organizations of the world today are investing in people across these domains.
Kalpesh, there have been instances of serial entrepreneurs making serial mistakes and yet getting funding. Now, are you funds like yours, for instance, or do you see in the funding ecosystem itself people now taking a relook at portfolio companies or even how they assess them? Now, you said you are now beginning, obviously, you are insisting on XYZ things. Are more and more people in your community doing the same thing?
Yeah, so I would say definitely all the P investment which happens, all these areas have been looked at. But in last 2 years, even at a sort of a VC funding which happens in a startup to a sort of a growing company, all these aspects are very closely looked at because the focus has shifted from the top line to EBITDA, making it faster positive, conserving the cash. So all these areas actually becomes very important. So now there is, in fact, there is a focus of, I would say, right person, right job, bottom line, cash reserves. How are you ensuring that you have adequate cash? Are you having any distinctiveness in your business? How you are ensuring that so that you can grow? All that aspect is also well taken care now in startup by the investors.
Puneet, I mean, there's so much talk about the funding winter, right? Is it, that because of the funding winter and people like Kalpesh becoming very, very, sort of tough on the companies, is that the reason why they are becoming tough and tightening their belt? What's your sense? Have they learned their lesson?
I guess so, if I may be as blunt as I can. But yes, there has been a change in the way or in the outlook as to how organizations were looked earlier, and post-COVID how they're looked. Valuation games obviously has taken a kind of a hit. But yes, there is a lot of dry powder left in the system. India continues to be the market still in the world to be, still attracting maximum amount of investment. But yes, it will change over a period of time. But at this moment, it's a cautious approach, but investments are still flowing in the country.
No, it's important you spoke of dry powder because that's something which we all know is there in the system. It's not being deployed for obvious reasons because there is still this risk element which is available, which is there in front of all the funds and whether it is VCs or PEs. In terms of dry powder now eventually being deployed, Kalpesh, what are the things to keep in mind?
I would say that there are no such no in any sector. I think what is looked at by the investors is that, is the company doing good in terms of growth? Does it have a good management? Is it had that ability to really focus just not only on growth but also on profitability? How it has done in last 2 to 3 years in terms of conserving cash? What are the potential from here now in terms of the company? While I would say that we, as a part of our process, we focus quite a lot on pre-investment diligence. But in last few years, well before COVID actually, we also spend a lot of time as part of our post-investment portfolio management. So we work with the portfolio companies in terms of, if there are areas which needs more strengthening, there is a focus or there's an opportunity required there. But yes, in our case, we largely target around 4 sectors that's been there since 2010, which is tech companies, financial service sector, consumer, and pharma healthcare. That's been large areas which we've been investing.
I want to ask you something which I'm sure our viewers would also be interested. You lead forensic services for PwC, and that's a very, very important piece in this whole puzzle, right? What are the red flags you tell your clients to be aware of, and what are you aware of as a forensic services advisor? What are the key red flags which immediately get you, sort of on a high alert when you see some stuff like that happening in the companies?
Well, yes, it's an interesting area to be in. We look at, so now a detailed due diligence is what each and every organization goes through before an investment comes in, whether it's financial due diligence, operational due diligence, commercial, as well as integrity related issues. A detailed due diligence on that aspect is definitely done by all private equities, and which actually gives them an indication as to what are the areas that you need to really focus on. So it's not just financial, but now all other parameters are also taken into consideration. ESG risks are evaluated, supply chain risks are evaluated, market and competitive analysis are done as to how will you face an issue. So from a risk perspective, these are the plethora of checks and balances that are really looked into.
Kalpesh, I want to, recently we had the Business Today Tech Today Congress in Bengaluru. And one of the panels, there was this very interesting thing of joy of missing out rather than fear of missing out. It's now converted into a joy of missing out. I've had big time, VC funds telling me that thank God we dodged this bullet and now you can see what's happening. Now that brings me to the issue of pre-investment due diligence, which has now become even more important in the current context. What are the key?
I think first of all, in a pre-screening, before we get into any kind of a diligence, we need to really have a confidence in the business thesis. Unit economics, when it starts with startup, that's been the word being used everywhere. Now it has gone beyond the unit economics that, okay, what is the path to profitability? When do you really see that if today you're investing, when are you going to be profitable in terms of EBITDA, starting with EBITDA? Not the pre-post stock options or anything, everything after everything, when are you profitable? Is it 25, 26, 27, 28? That's become a critical aspect. I think once we are confident about that, then we try to start ticking off whether any red flags in any kind of diligence, be it, how the risk of starting with governance aspects.
Do you work closely with people like Puneet in terms of the forensic aspect of it?
Yes. Yes. Yeah. So we work with all the big fours to get the experience from them at various sectors, and try to get very specific areas covered in the diligence. And the diligence process also is a point very specific points that we want an answer or conclusions on this basis. If it is coming into sort of a green or orange, and then we would really evaluate. If it is really red, then it will actually go through a complete detailed IC process. Our investment committee would get into the details of it really before we give a go ahead for that investment.
And you have had obviously cases where you walked away from.
Yes. In fact, I think 2 days before actually signing, we have done that situations where we found some red flags, and it was not very conclusive, and we have done that as well.
We are talking, he spoke of also ESG risks. What are the kind of ESG risks which you think should be red flagged?
So basically ESG is environmental, social and governance, right? So primarily we focus more on the governance, which is still moving. Rather we focus on all the three. There are different teams which kind of look at it. And the reason why we look at an ESG risk is because that's where the sustainability of the future will lie. And that's where the organization of the future will be evaluated as well. But with the E and the S, there's also a G component, which is the governance part of it, which will in the future play a major role in terms of getting things aligned and making sure that the organizations are fit for future. So that's how the role of ESG is going to pan out in the future.
But some of that E and S, for instance, is also linked to supply chain, people
Absolutely.
who supply to your companies, etc. So that again is
Correct.
not
So
really in the control. But
So in fact, ENS has actually become very critical in terms of investing in last 2 to 3 years, and anything to do with where you get a red flag there. Either we have to agree with the company that they will make sure that this is fixed within 3 to 6 months. If it is not, then we would not invest. We have that. We make sure that that commitment is there from the by the company, and then only we would invest. That has been very seriously been taken as investors.
Most of the startups, Puneet, are digital natives, right? The data being the new oil, data needs to be protected. Privacy is a huge element which is across the board a concern. Cybersecurity risks are being flagged by many of your surveys as one of the key areas. How are you telling startups and your clients to be aware of this risk?
So it's been very simple process, right? Each startup is so focused on the growth aspect that they just need more and more data to come in. Basis that data, they kind of put in more artificial intelligence and routines to kind of get to the output that they're desiring. But at this moment, they're just going with the basic requirement of getting a tick in the box from an audit perspective to say, am I complying with the basics? But I think cybersecurity plays an important role, because if you don't control that data today, you will probably lose the competitive advantage going forward. So it's very important from a startup ecosystem and a fintech, or where data plays an important role, that data security is paramount importance, because that's where you have your competitive advantage. And we will see that if people and organizations don't focus on that, they will lose that in the future. So data is absolutely the new oil. So I see that in the last 2 to 3 years, a lot of shift has happened on this. Have we reached the level, ideal situation that we should be? Probably not. We are getting there, but I think the focus has come back.
What is your sense, Kalpesh?
Yeah, I think cybersecurity is a very key risk there as part of our diligence process. If we perceive that the company has a real risk of data, we would get a sort of a audit done on that. We would look at what audits have happened in past on that cybersecurity of the company. We feel that there are areas which needs to be taken care again by the company. We would again make sure that becomes as a condition for us in our investment process to make sure, because it's a big risk of data being compromised and largely in a kind of a fintech company or a consumer company. Maybe a lesser risk in a pharma company. But in such companies, obviously, as a process, we would get a sort of audit done or a diligence done on these areas.
Now, we are running at the end of our time. Just wanted to get some closing comments from both of you on overall what is your sense of the ecosystem now on the governance aspect of startups, and how do you see it playing out? I'll start with you, Puneet.
The governance issue on a startup is kind of, I would say, gaining momentum, and it's just not on one or two aspects, but if I have to talk about it, it's kind of taking a precedence across all areas, which is primarily startups getting into a detailed, comprehensive due diligence, which is financial, operational, to a great extent, forensic. There's a lot of focus on technology and data. There is a lot of focus on ESG, as we were talking about. You're seeing that the entire value chain is kind of now coming into the play, which earlier had bits and pieces of it.
Kalpesh, I mean, it was also said recently, I was speaking to a VC player who said that it's winter, but if it's winter, spring can't be far behind. So things may be now looking up, and that's what you seem to suggest as well. It's not, the worst seems to be getting over. What is your sense? I mean, are the risk factors now being addressed by all the startups? Is the worst over in terms of these governance lapses, which we've seen one after the other coming forward, and what's the road ahead?
Yeah, so I would say I think there is a consciousness around this whole governance process system, and this is also critical. That's what now is there in minds of all the startup, or I would say all the entrepreneurs. I think if the companies really deliver on their growth, or possibly even if they have not, but they are strong, they come out strong with the current situation, they manage their cash well, they show a path to profitability in next few years, I think the spring is there. That's what I would say.
I think the good news is that most of the companies and the startups are aware, and there's a very major sense of that profitability is going to be the key, not GMV and GOV and the top line. It's the bottom line which the investors are looking at, which it can only be achieved by proper governance and having the right processes in place. Thank you very much, gentlemen, for an absolutely wonderful session, and look forward to speaking to you again.
Thank you.
Thank you.